First off, I am Bob Bradley. I'm CEO of Newsbreak Media Networks, and we are an alum of Startup Day. And we are honored to be a nominee for the Traction Award this year. Thank you very much for the committee. We really appreciate it. We're also a Knoxville-based company. And while we're here at Knoxville, when we set out to raise capital, it wasn't ever easy. And I'll tell you, for all the startups that we're seeing pitching here today, it's quite a chore. But I think today what you'll find during our discussion that we have a great esteemed panelist here that's going to give us some tips on what they might be looking for and how you might be able to get some traction in those discussions. But before we jump into our discussion, I'd like to turn it over to Eric very quickly. This is, I'll tell you, I call him Doctor. This is Dr. Eric Dobson. Eric is the CEO of Angel Capital Group. He's a 2015 Startup Day sponsor, and he's on the forefront of really helping companies here in East Tennessee develop startup strategies through ACG. And they've been a great help for everyone in our ecosystem here. Eric?
Bob, first of all, that's incredibly kind. Thank you. Thrilled to death to be here today. Thrilled to be a sponsor. And I think the announcement we're here to make today is we've basically put down a term sheet for General Graphene, the company some of you know, here from Oak Ridge, Tennessee. They're seeking an $8.5 million, $8.7 million Series A, and we've put together a syndicate to take the entire thing, which we believe to be the largest tech-based Series A in Tennessee, certainly this year, maybe ever. Yeah.
Thank you. That's fantastic news. To Eric's left, we have Grady Vanderhoeven. Grady is EVP board member at Eclipse Management, which is the general partner for Meritage Ventures. Meritage is based out of Oak Ridge, Tennessee. Grady's the fund manager for Meritage, and they basically make equity investments in rural, central, and southern Appalachia, if I'm not mistaken. So very geographic in their investments. And then just to his left is Christina Montague. Christina is the managing partner with Jump Fund, which is a Chattanooga-based fund that is designed to help grow women-led high-growth businesses and build women leadership roles in the southeastern part of the country. They're doing some great things. I spent some time with them prior to the start of today, and there's some exciting stuff that's going on down there. So with that, I'm going to kind of jump into the questions here. I've got a couple, and I'm going to start with you, Grady. You know, as an entrepreneur, when you come up with an idea and you start to execute on that idea and you try to keep the momentum going while you're waiting on this capital investment. The problem that we run into is that we don't have the funds to tread the water long enough to keep things going. What would you do to advise a startup that might help expedite that investment process and that discussion process around investment?
Thanks, Bob. I think you could probably give a 30-minute talk on this question, frankly. But a couple of thoughts that I have is, I think one of the things that a young company can do to make themselves attractive to capital is generate revenue as quickly as possible. I think finding a customer, finding a user, generating revenue, whether it's product revenue or service revenue or one-off revenue or even an interim product that isn't the final product. Generating revenue is a great source of validation. It validates the business, and it generates cash to support the business. Vic Sherrill is going to be on a panel later today, and you mentioned General Graphene. We invested in a company that Vic co-founded a number of years ago, and the product that company sells today is not what they were selling when we invested. The revenue they were generating at that time, which attracted our investment while they were preparing to launch the ultimate sort of home run product, they're not even doing anything with that product and service now, but they were able to attract our investment because they attracted revenue, and they were able to support the business with the revenue they generated while they sought to raise more capital. And then another thing I would say, thinking about it from the other side, how do I, as an entrepreneur, preserve my capital? I would say don't invest cash or time in any activity or asset that isn't going to contribute to near-term revenue generation. I mean, for example, I've seen companies that go out and have, really nice office space. Well, they're burning a lot of cash paying for office space, and if that's not contributing to near-term revenue generation, then they're not really doing anything to support their business, keep their runway as long as possible while they seek to raise capital.
Christina, from your perspective, what are the must-haves that you'd like to see before making an investment in a startup venture?
Right. Well, for us, we do very early stage, for the most part, investment, so pre-many companies. And for us, it's really about the team. So a lot of investors will tell you that, but for us, that's very important to us because we're interested in strong women business leaders. So we really look at that team. We actually have a psychologist as one of our general partners who works to vet that. So that's extremely important. You definitely have to understand your business model very thoroughly, and if you're going to put a set of financial projections before that, you be able to defend it. We're probably going to cut most of those at least in half, and so you have to be able to help us drill down. I have another partner who loves to just take that Excel spreadsheet and move the numbers around, so you really have to be able to address that. And the product idea are obviously very important. We have to see that has legs, that you understand your competition and how, what the market opportunity is for that. But those numbers are, with really early stage companies, that's hard to really put a pinpoint on because the market can be very large, but what is your piece of that? So really understanding that and coming to us with a lot of knowledge about of your piece in that bigger market, and how, if you're going to be a disruptive company in that market, how disruptive are you? How do you compare to the competitors? We heard some of those questions on the stage today. So those are the most important things, but for us, really, it comes back to that team and can you execute? You could have a fabulous idea, but if we don't believe that you can execute, whether from your prior experience or what you're presenting to us, then we probably don't really have an interest.
Eric, are there some must-haves that ACG looks for?
Yeah, absolutely. And it's hard to follow up Christine because she speaks so eloquently about this, but we definitely look at, we want to see more, not just a one-man band. We want to see a management team in place. We talk about a triumvirate. We want an executive. We want someone that can manage sales and somebody that really understands the product development. That's sort of a minimum ante for us to get involved. Obviously, valuation. I mean, there's a low point and a high point. If you're not close to those two, it's probably not a conversation to be had. Other than that, we want to see some kind of a developed product, something we can call somebody and say, would you pay this price for this product? It gets back to Grady's point of validation. So.
You announced your investment, and it's a fantastic announcement for East Tennessee and Knoxville. But fair or not, I think Knoxville sometimes has been characterized as being a bit risk adverse, right, with some investors around here. And how do we get past that? I mean, clearly what you and ACG have done now is fantastic. I mean, do you see this as a trend? Do you see? I mean, what do we have to do to get over that hump?
That's a fantastic question. I would like to point out that 95% of that money for that round is coming from Nashville and Knoxville. I mean, that's a red letter day, I think, for the whole state, because this is a win for everybody. But if you really look at, let's just take Knoxville. Historically, we've got a culture of risk aversion. Lots of Scots Irish here. There's a historical perspective of being risk averse. Second of all, of course, this was an industrial town, so people understand how to buy and sell dirt. And they understand products, but it's very different. That doesn't lend itself well to talking to a media company or a SaaS company. And then finally, the third thing being just the state of the economy. If you look at Knoxville, we never had that sort of watershed event like Chattanooga had, or Greenville, South Carolina, where our industries collapsed and we had to remake ourselves. So we've got UT, you've got Y12, Oak Ridge, TVA, some big commercial anchors with Pilot, Alcoa. So the bottom line is, I don't think Knoxville is ever, at least not in the near future, going to reach that crisis point where this happens. So it's got to be a grassroots effort. And like I said, we try and lead by example, but I think the question quickly becomes, how do we change that culture? And I think we're doing it. I mean, this kind of forum, it's telling everybody they're great companies here, there's money to be invested, we can do it here, it's safe to go in the water. And I would point out very, shamelessly here that, there are a number of angel groups throughout the region. Obviously, Jump Fund, we've got in Chattanooga, the Lamppost Group, Knoxville has the Lighthouse Fund, ACG, Tri-Cities has Angel, Roundtable. There are very credible, experienced angel groups in this area that can really help someone that wants to be an angel investor or wants to start a company, either one. So contact us if you don't have to be an experienced investor. You can learn along the way. This is an industry you have to learn. Sort of, we always say learn the hard lessons the easy way. But so there are established angel groups all over the place, and pick one out.
So Grady, I've got a question for you. I mean, you hear this all the time. Is it the idea, or is it the team, the management team? I mean, what in your mind, when you look at a pitch, when someone comes and talks to you, is it that idea that has that hook, or is it that management team that's telling that story?
And I've said before, it has to be a good idea, but I've said before, and some people in this room have heard me say this, I'd rather have an A team with a B idea than an A idea with a B team. Because an A team will figure out how to make it work, right? And even if the first product or the first service is imperfect, an A team can figure out how to solve problems and be creative and pivot, and they can raise capital and they can be successful. But if you have a great idea and poor execution, or inexperienced team, or an incapable team, that business may fail even with the great idea because the team can't execute.
Christina?
Well, I've kind of already heard my piece of that, although I think that sort of to Eric's point about risk too, I think that you also have to be able to take some of the risk and some really bold, big ideas too. So sometimes the idea does drive the conversation. For instance, one of our companies is 3D printed shoes. You'll have a 3D printed car here. We have 3D printed shoes and 3D printed houses in Chattanooga. So we, I think we took a big risk. We obviously believed in that team, but also a big risk on that idea. It actually has started to pay off for us in a really big way. We had a large Silicon Valley investment in that deal. So I think that it's a little combination for us. It's definitely about the team, because for us, we have to see that strong woman who has who has that potential to grow that company, and for us and our fund really be that marker of excellence out there in the market so that we can showcase them.